Awesome. All right. Good morning, Mirza, Gary, and Joe, Jim, Rom, Jeff, Janet, and Deepak might be. Good morning. Good morning, Mary Jane and Chris M. DMC, as always. James and Juana, Keith. Good morning to all of you. And of course, Trendy John, so good to have you back. Third day this week. Good morning, blue sky. All right, guys, we're going to get started with the blueprints like we do every single morning. It is 7 o'clock Central Time. We get started an hour and a half before the bell rings. I'm going to go over ES, NASDAQ, and Dow futures charts, what I am looking for from a top-down approach, and then go over my SPX day trading chart for today. And then John is going to jump on the mic and spend an hour with you going over all kinds of good information. So, with that being said, let me get started here on the ES weekly chart where we have been in a very tight range for 7 or 8 weeks now. We're at the top of that range. The top of this range has been tested multiple times on all time frames since it was created. So any sell zones that you see on my charts, just automatically know that they are tested zones. They are counter trend. Why do I say that? Well, very simply, look at the trend of the ES futures chart. It is clearly a bullish trend. Okay, very, very, very clearly a bullish trend. And so this consolidation is a rest after basically 9 weeks straight to the upside. Now we've taken a pause, but my bias remains that the trend, once this pause is over, will continue to the upside. All right, so we are at the top. Exercise caution here if you're long positions, knowing that at any time we could turn back down, come back, and test support. The first level of support on the weekly chart is going to be 74.87. That is the 9 EMA. Below there, you do have 74.10 to 71.53. That is the bullish channel, the 236 and the 38.2 of the Fibonacci range. It is also an inside and up candlestick structure. This demand zone has been tested multiple times, as well as the supply zone on the smaller time frame chart. Speaking of, here is the daily chart. I can show you this supply zone. It was created way back here weeks ago, as in the first week of June is when it was created. And then in mid-June, we came up, we tested it, we made a new all-time high, and we created supply yet again. So I don't have this still as a big red rectangle, but it would look just like this. Okay. This is supply. Price is in it. It has been in it. It has tested it 12, 13 days. And until proven otherwise, this is where I exercise caution. I'm looking for signs that sellers are in control of the buyers and signs that we could potentially be moving down all over again. We did create a demand zone right here. We had a up candle and then two pauses before creating a little imbalance candle here straight back up into supply where we turned back from, came back down, tested the bottom, and we moved up 2 days and we came down, and you know the routine. It's over and over and over, rinse and repeat while you are chopping in a range. But notice during this chop, yes, we have this brick wall here that has given bulls a hard time. We have supply right here that price is just stalled at over and over again. But notice that on each of these pullbacks, they have been higher lows. So my bias remains to buy a dip for a breakout to the upside, knowing full well that we are right at daily supply. Okay, so on as far as the immediate support on the daily time frame, thinking of the daily 9 EMA, that is 75.68. So the weekly is 74.78. The daily is 75.68. So 75.68 is the daily 9 EMA. Then a very popular reversion to the mean type of concept would be this daily 21 down here at about 75.40. And of course, you have the demand zone at 75.23, 74.68. The daily 50 is inside of there. Lots of confluence here on a pullback back down. I'm still looking for buyers to show up in this zone right here. Okay. 4-hour chart. Now, we are in 4-hour supply right here. But I shrunk this zone just to give me a clear picture to look at up here. This upper part of the zone, 76.25 to 76.50, basically, it's only been tested once. Since we created it right here, we've only come back one time, and that was, looks like 7/10. July the 10th, very recently, right? We came back, we tested, we sold off from there, coming back to the 4-hour imbalance, and now we find ourselves back up towards the top. Why do I say, why don't I have my zone all the way down here? And simply, it's just been tested over and over again. But you can see on this current 4-hour situation here, we're trying to print an inside and down. Okay, it will be an inside and down if this 4-hour candle closes down here. But notice we are coming into support on the 4-hour in the way of the 4-hour 9 EMA, this bottoming wick, where earlier this morning, obviously buyers stepped in to create that bottoming wick. So we are coming into support on this 4-hour chart right around 75.93. Okay. The entire 4-hour cloud you treat as support until proven otherwise. If we want to come back to yesterday's imbalance where we started moving up on the CPI data right there, guess what? We could see price turn before the demand zone that we pulled back to yesterday, right? I mean, CPI data, yeah, that came out, but price came down into demand, into an imbalance area, and that is where buyers were waiting. That's where buy blocks were setting. And so when those buy blocks get filled, price goes up. CPI data, demand, buy blocks, price went up. Okay. That's a rinse and repeat over and over again once you learn supply and demand trading. All right. But immediate resistance is going to be about 76.06. You have an upper monthly edge, you have an upper weekly edge, you have an upper daily edge. You have a confluence of 3 different upper trendy edges all in this area, all the way up to what was the high yesterday. Anywhere from this upper monthly edge that price is below to the high that was created yesterday should be resistance until proven otherwise. Support via EMA cloud, via this bottoming wick. Then, of course, the daily edge mid. This is an over underline here. Look for support at about 75, 72. Let's look at my daily blueprint. This gray zone, it was here yesterday. It's here today. It's the upper monthly. It's the upper weekly, the upper daily. The recent high before the supply zone. Remember, I shrunk that supply zone to only include the upper part, 76.20 to 76.48. Well, this is still resistance until price can get over it. Sunday night, early Monday morning, we came up, we created a high at 76.15. And every time we've gotten close to that high, we've turned around, including this morning. This is the immediate selling pressure, 7,600 to 76.15. This is supply above. It has been tested, 76.20, 76.48, 75. In a sell zone, such as the gray or red zone, because it is counter trend, I'm not blindly going short here. I am waiting for confirmation that sellers are overpowering buyers. I will look for lower highs and a break below the body of the lower high candle before going short in a sell zone today. Immediate support 75.89. We created a double inside and up right there. Then 75.8207 is a key Fibonacci level just of the most recent move, which was yesterday, and it is a 38.2. I rely heavily on the 38.2 and the 618 if I am looking for potential targets, in this case, to the downside of a bullish trending market. The 38.2 and the 618 give me good targets to target. I also, of course, use candlestick structure. The bottom of this bottoming wicking candle after we started our move up yesterday lines up in my favorite zone to trade. And my favorite zone to trade is the 50 and 618 plus candlestick structure. So if I am short from a sell zone today, I am looking for targets of 75.89 to 75.82, then 75.70, and finally back down here at the buy zone that is was created yesterday at 75.57. Then that before that, last Thursday, we created the bottom portion of this buy zone. All right, so it is wide. It is 49 points wide. If I am looking to go long in here, I would scale in to this position using the top portion or the top half of the zone to start my trade, and then waiting for the bottom half of the zone to add to full allocation. All right. John will talk in depth about the PMZ, our favorite, or my, and I think it's John's too, favorite day trading indicator. So I'm going to say our favorite day trading indicator. It's going to pop up as a box on the chart. If price is below it, it's a sell zone. If price is above it, it's a buy zone. And I treat it just like I would any other zone on my chart. All right. All right. Let's look at the NASDAQ. As far as the NASDAQ goes, it looks like the ES in that it's very choppy. The difference is the ES is at the top of the choppy range. The NASDAQ has been lagging behind for the last several weeks. Big tech has been lagging behind, whereas the Dow has been making new all-time highs each week. All right, so we have a little bit of a lagging pattern here with the NASDAQ. That's why the NASDAQ is not up towards the upper portion of the choppy range. It is actually right in the middle. Here's the lower, here's the upper. It's in the middle. You're getting a nice looking candle so far this week, 2.5 days into it. But we won't know how this candle closes until Friday. We created an inside and anticipation up here last week's candle, and 29,551 is an important level to look for support. You can see the monthly edge mid there, the weekly 9 EMA there. You got a lot of confluence at 29,551. Daily chart looks something like this. This is daily supply. It is, I mean, this red supply zone could be all the way from about, what is that, 1,000 points wide right there. I don't want to make it 1,000 points wide. Here is the chop, the brick wall that has been that 30,000 or 30,000, 31,000 area that bulls have had a very, very, very hard time to get back into. You can see it. Look, we left here on the 2nd. The 6th, we tested it. The 7th, we almost tested it. The 9th, we almost tested it. The 10th, we tested it. The 13th, we tested it. Today, we came close enough to testing it. You can see this is a problem area for the NASDAQ. Our upper weekly edge is here. The daily 21 is right below that zone. Look for selling pressure in this area, but you have immediate support below in the form of the daily 9 EMA, in the form of the daily 50, in the form of the monthly edge mid, weekly edge mid, and where we have been turning up from ever since the end of June. So you have immediate support below, immediate resistance above, you get choppy price action, and that's what we've been dealing with. So all of that to say this, on the 4-hour chart, look for support anywhere around this area. The monthly edge mid, I've already showed you all of the different reasons why on the higher time frames, this area is your immediate support. The 4-hour chart goes right in line with that. I mentioned my favorite zone to trade is the 50 to the 618. That's this zone. This is support until proven otherwise. This is resistance till proven otherwise. In the meantime, we're chopping between these levels, and you want to be a buyer towards the bottom, a seller towards the top. The daily blueprint looks something like this. I kept the same buy zone. I did not make it as wide as 510. I could, because we have the inside and up candlestick structure there, just so if you're looking at the chart for the first time and you're looking for a colored in zone, you will recognize it as such. I will make this zone gray on my chart. Now, we could not, it is possible that price on a pullback doesn't come all the way back here, but this is a good looking set and forget zone for me, and that's why it is on my day trading chart. I know that we could see support here between 29,772 because of this imbalance candle, right? And down here at the monthly edge mid near 29,611.72, we also have an imbalance candle, a trendy edge, and a reason that price wouldn't make it all the way back here. If bulls are ready to break this thing out, then if you run your Fibonacci's, you will know that the bull channel, where price is pulling back to, my favorite level to use as a target is that 38.2. And then I love to trade off of the 50 and the 618. In this case, I would come down and use these bottoming wicks rather than just leaving it to the 618. I would use those bottoming wicks right there. And you can see this zone would be, if bulls again want to keep this thing in the sideways to up price action that we've been seeing on the higher time frames, they will defend this level today and price will turn up from there. So here's the bottom of your bull channel that's lining up with the imbalance candle where price could just turn right there. Or this intraday, if I'm actively managing, is a area that I would be willing to go long from. Now, if you're sitting in front of the charts or if you're not sitting in front of the charts and you're like, hey, I don't care, I'm willing to put on a trade, even if I'm not able to actively manage it, I'm willing to put on a trade at that 50 and 618 Fibonacci level there, and you're okay with this sort of risk, then have at it. I'm just talking about what I would be doing, and I am in front of the charts to actively manage so I can play off of that zone. All right. So immediate resistance inside and down right here, and you're actually getting some continuation to the downside. I'm keeping this sell zone in place, even though last night, early this morning, we got up towards the top of this sell zone. I'm keeping it right here. All right. 29,960 to 30,094 is the immediate resistance. As far as supply goes, above there, 30,185 to 30,450 is my supply zone. Then immediate support, the bottom of the bull channel, 29,772, or this golden pocket, 50 and 618 buy zone, or the zone that has been tested so many times on pullbacks right here, 29,509 to 303. Of course, I have lower zones below if they are necessary, but I'm not anticipating something like that today. As far as the Dow goes, I'll do this one really quickly. It has been outperforming each week. We've made new all-time highs. We have not done that this week. We actually had an inside week last week, and right now, anticipation-wise, it would be an inside and down because price is below the body of that inside candle. All right, so immediate resistance 52,962. Immediate support, the 9 EMA here on the weekly chart 51,867. Daily looks something like this. We are stuck like Chuck in a range now. It was a range that we chopped at for quite a while, and then we moved up making those new all-time highs each day. I don't know if you remember that, but I do. We were all-time high, all-time high, all-time high, all-time high, all-time high, all-time high. Well, before that, we were in this choppy range right here. Notice that on these bottoming wicks, that's where we've pulled back to and buyers have stepped in. I'm looking for support to continue here, anywhere from the top of this daily cloud all the way down to the bottom of this demand zone. Okay. 4-hour chart looks like chop. Looks like the upper end of the chop is related to the weekly edge mid. The lower end of the chop is related to the lower weekly edge. The upper monthly edge is the midway point of this chop. So keep that in mind for your blueprint for today. Lower end of chop, upper end of chop, and the midway point. Sell zone, buy zone, if you're actively managing anywhere from 52,533 all the way down to 52,128 would be a buy the dip opportunity. Selling the rip at the top of this chop zone. Supply is above all the way up to the all-time high. Okay. SPX daily blueprint looks like this. For those of you that aren't actively trading and taking scalp type points, 7,500 to 7,482 remains my buy zone. Below there, the lower weekly edge, we have candlestick structure here, key Fibonacci levels here, 7,441 to 7,400. These are two of the set and forget type buy zones. If we have a weak day between, or a bearish day and price gets below 74.82, 74.59 would be the next target to the downside, and then targeting this lower buy zone down here. As far as those of you that are in front of the charts and scalp trading this, I have a buy zone down near 75.18 to 75.06. This was our buy zone yesterday that we went long from on that quick pullback, and price moved from zone to zone yesterday from a lower daily edge to an upper daily edge. It was a great trade to the upside. Now, I still have supply here. This zone has been tested multiple times. I've already went over that with the ES chart, and it is the sell zone, 75.61 to the all-time high, 76.21. In this zone, I personally will be waiting for confirmation before going short. Yesterday, we closed at 75.43 and a half. That remains an over under line. If we get, well, we're about flat now, but if we have a pop on the open and we do not come back to where we closed yesterday, that would be a great target to the downside if you happen to be short below a PMZ or short below a, or from a sell zone. Closing the gap and filling where we closed the prior day is something that typically happens. Not always, but most of the time. So the trade is this. If I am short from a PMZ, if the PMZ prints up here, I would trim at 75.50. That has been a brick wall for quite some time on SPX. All right. 75.50 would be a trim back to the downside if I'm short from that sell zone area. Then yesterday's close. 75.35 is about halfway between the lower daily edge and the upper daily edge, so it would be a target. Then the bottoming wick of 75.26. Finally, back to this zone that we found buyers at yesterday. My favorite zone to trade, of course, is down here, and that is the deeper pullback buy zone. I have buy zones below. Okay. So that's what my SPX blueprint is going to look like if you are actively scalping it with. When the PMZ prints on the chart, I will look to go long above a PMZ or short below a PMZ. I personally do not trade the first 5-minute candle. I wait for the 5-minute candle to close, then a retrace to the PMZ. If the retrace in a bullish market is retracing it back to the top of the PMZ, I will have an aggressive bid with half my allocation at a touch of the PMZ and save the other half of allocation with a confirmation type trade. If it is a counter trend trade, such as a retrace to the bottom of the PMZ in a bullish trending day, then I do not have an aggressive bid at the PMZ. I wait for confirmation before taking a counter trend trade each and every time. Twins Mom, that is the lower daily edge for today. Lower daily edge for today by the low on Monday. Monday's low. That's all it is. All right, guys, that is my time. I'm going to turn it over to Trendy John and listen to what he has. If you're in the SPX room, my set and forget chart is loaded with the zones I'm looking to trade from as well as the targets. All right.
Can you hear me? Let's see. Smell Can you hear me now? Alright, let me try one more time. Thanks, Mel. Alright, bye. And it's still echoing. Give me 1 second. 3. Okay, cool. I had a wicked echo in here, and it's showing that I'm in here 2 times. Okay, good deal, good deal. Well, you guys didn't miss a whole lot, I don't think. Let's go ahead and share the screens over again, and then I'll make it super, super fast. That is so funny. Let's go right here and right there. All right, cool. Here we are. So this morning, the important data that you just missed on this is that we uh, are having a catalyst, right? A catalyst of PPI, right? Anytime, and that's why we're aware of the news, but we don't trade the news. What does that mean? That means that I don't think many years ago I did. I was the kind of guy that if Jim Cramer said, "Hey, buy Apple," I literally would just go in the market and go buy Apple, and then I would lose my butt. All right? That's what that means. Or I would walk into a store, say like the other day I went to Costco and I'm like, "Holy crap, there's a lot of people in here. I must go back to the computer screens and buy calls." This is true, and anybody, that has been in my shoes who first started trading, you might have done the same things. Now, as mature traders, what we do is we identify the zones and then we trade them. And the catalyst is this morning is the PPI. So $67 here on micros or $600 on the minis. Okay. Now, what I did this morning is I simply identified where I wanted to get long. I noticed that the market was pulling back into our zone. Now, Mel and I have been using these beta indicators, okay? And what I have found is, especially first thing in the morning, is that the 4-hour zones are my go-to. And the reason why is because at 8 o'clock Central, okay, we change over candles. And just like the trendy edges, we have the future trendy edges. So I'm wanting to go long at the purple. I'm looking for shorts at the blue, and the gold is the golden profit level. It's really straightforward. Okay. So this morning, I just want to talk you through it. I pasted my chart in the trendy room. You'll notice that I had liquidity chop. It happened to be right around the purple zone. So I have confluence here. Okay. Price came down into the confluence, and I noticed it was right before the catalyst of PPI. Now, can anybody tell me what is the secret here? Is there a secret? There is a secret here. Let's see if anybody can tell me. I've actually taught this for many years, and you will find that when prices are moving into the zone before somebody decides to speak, before PPI comes out, a lot of times, if you're moving price into a demand zone right before a catalyst, you're going to see a move to the upside most of the time. Now, I didn't say all the time. Okay. Now, I'm going to flatten my trade here just because I want to be able to take some live trades as soon as we open. Okay. Then, if people are talking or PPI, CPI, whatever, doesn't matter, is pushing into a supply zone, then we're looking for the short setup. Now, this can be confusing because the majority of people, believe it or not, get super scared to the downside and they get super euphoric to the upside. So, what's happening here as we move into the top of the hour is that a lot of people are waking up. See, I always look at all of you as being really good students. I really do. Like here at Simpler Trading, we have amazing rooms, we have amazing students, people that actually want to wake up early in the morning and listen in and find out like what is going on in the market. I love that. See, back in my old days, I'm not saying they're all like this, but in a Discord room, it's a little bit different. You know, people are like, there's a lot of nothing against young people. I feel like I'm young. Yeah, tons of young people waking up 5 minutes before the market opens, you know, just like, hey, what's the next alert? Those kind of things. Well, when you're waking up late and you don't understand this, what you're seeing right now. Oh, wow. Blue Angels are flying right over my house, so I'm gonna have to get you guys some footage here in a few minutes. That is loud. Um, what you're seeing is when you wake up late is you're getting euphoric. All you see is this big candle and you're getting super excited, right? You're getting super excited, but what the advantage of the room here is what you're seeing is that they are driving price into a supply zone that's already been tested. All right. So now you're equipped with all the right things. You understand where the zones are and you understand what the confirmation process is. Let's talk about the confirmation process. So right here in the middle, what I have on is a 1 minute chart for me because I use a 1 minute, especially in high volatility. Okay. I'm looking for a fast alert because the reason, and I'm going to take you to a whiteboard here, is that price can move so quickly that I need to catch that before the end of a certain period. So, for example, if we're waiting for 3 minutes or we're waiting for 5 minutes, by the time something is finished moving, it's moved in high volatility, can be 10, 15, 20 points. So, what I'm trying to do is capture this move very quickly. Okay. So, for example, again, high volatility. I'm looking here and I could see, you guys could see it too. Hopefully you could see it. Mel's process, when I zoom in here, I'm already taking my trade right here. That's what that green arrow is. Boom, taking that trade. Okay. I'm already in the trade. I'm already in the trade. There's a purple level here. There is a confirmation setup here. All right. All of those things are happening. As momentum shifts, we get a red to white candle. Well, if you look closely here, you'll notice that we have a crossover in the EMA. That's what tells me, you know how like a lot of retail traders are looking for crossovers? Have you guys ever heard that? So when you have a crossover, you get a momentum shift in the market. Boom. This is letting you know that. Then we start to see green, and green means now the momentum's kicking to the upside. Here's your 7610 level. Now, it's important to understand that the 7610 level has worked for us several times and that it has been tested. As Mel had pointed out this morning, I think she said that it was like 7625 or so has been tested and it wasn't, you know, it was several weeks ago or whatever. All right. So we're getting very close to that. And sure, you can have your red level and you can push it all the way up to 7625. I tend to keep mine. I just leave them. I leave them where they are because then I always go to my discussion of the bear house. And I know that you've heard this before. This is a bear house. Price is pushed into the bear house. And if you're a bull, you better be minding your manners. What does this mean? That means that we need to make sure that you understand that the bears are in control. You have just now opened up the door. They have let you in the house. And if they want to, they will kick you out. Where will they kick you out? These things are really, really important. They could kick you out back to the EMA cloud. They could kick you out to the imbalances that were created by the catalyst in the market. This is your imbalance candle. Did you know that the majority of people will not take this trade because they have been taught that you must wait for the catalyst to happen? I'm here to tell you that's bullshit. And I will say it over and over and over and over and over again. The only thing that matters to me is the identification of a zone. And then before that catalyst happens, if this here is within your risk tolerance, I don't know if you know this or not, but it doesn't matter if you take this trade at 9 o'clock in the morning or if you take it at 7 o'clock in the morning. It is a zone. It is meant to be bought. And if you're okay with the risk, you take the trade. If you get stopped out, you take a loss. I don't care if you take it at 7 o'clock, 8 o'clock, or 9 o'clock, folks. You're either going to win or you're going to lose. Listen to that. It doesn't matter what the catalyst is. The majority of traders are late, and the market knows this. You will be taught this for the rest of your life by many traders, good and bad. They will tell you that you have to wait, and you're always waiting. You're always a step behind from the big money because you have to watch this happen. Then you have to think about what happened. There's people that will actually take the information and go, hey, I just listened to the PPI or looked at the PPI report and the numbers said this, right? We're buying too many groceries. Okay, cool. All I want to do is make money from here to here. And if I get stopped, that's okay too. But I have to execute my process. And that's what we do every single morning, folks. Catalyst push from my buy zone into the supply zone that I've given you for the last several days. You know what to do. Price pulls back to the 9 EMA here on the 1 minute. Maybe you're scalping. You go short. You know to cover here with one of your contracts. Price keeps going down. You're looking to the left and you're thinking to yourself, hey, there's a big candle there. Price might bounce there. There's a big candle there. Price might bounce there. And that's what we do, and we rinse and repeat every single day. So, again, the confirmation process is here. And I want to make sure everybody understands this beta indicator here, folks, it will only set up if the confirmation process happens at the zones. This beta indicator right here, see this right here, where it's saying, hey, go short, this is your stop. This one is a shotgun method. This is, I don't care where I'm at on the chart. If we're getting, like, for example, we got lower highs here, we got the entry, and if you like the risk, you take the short, okay? This is a shotgun method. And the reason why I like it like this is because sometimes they don't exactly line up with zones. And I, for one, really love a trade if the risk is small. So I'll take it regardless, because I know that there's times when we have supply zones and we have demand zones, but we're stuck between them, right? And we've moved away from the PMZ, or we moved away from this level and you've already taken your trade off. And you go, damn, it's still going up, man, or it's still going down. I took profits too quickly, right? So I can still get a confirmation somewhere in the middle of all that. And if the risk is nice, I could still take that trade. Okay. So again, shotgun method here. Over here on the right-hand side, this is the NASDAQ futures. And same thing. I have 4-hour zones here. I got this on a 5-minute. Once the 5-minute stays here, you can change it anytime you want. But what I would recommend to you is that when you understand what the actual PMZ is going to be, then we are going to mark that on your chart. Okay. So this is a good practice. Once the PMZ pops up, guys, I want you, at least on Thinkorswim, I don't know any other platforms besides TradingView, but Thinkorswim, I want you to go ahead and use this dollar sign. Let's say that the PMZ's popped up, which is 5 minutes before the market opened. What I want you to do is I want you to put a line on the top of the PMZ and a line at the bottom of the PMZ, just like that, right? Now you have your levels. Now you can go to any time frame you want to. That way you can ensure that the PMZ is not messing up. Does everybody understand? All right. Just so that everybody understands. All right. So you want to do that after it pops up. So that's just a good practice to get into. All right. So again, I have them on the 5 minute, but I could change these through the day. When do I change these? I'll tell you, when things get boring, when things get really choppy, really sloppy, you want to start going to a higher time frame. And the reason why we go to a higher time frame is to reduce the number of signals, reduce the noise in the market, and you start to concentrate on bigger time frames. And a lot of times when you go to a higher time frame, you'll start to see something that was forming that you didn't realize. So for example, let's go over here to the left-hand side. On the ES futures, we are going to maximize the sell. This is what the ES futures looks like, okay? Now this morning, it was moving, right? But let's just say that we were getting a lot of sideways action. So for example, in here last night around the supply zone, what I could do is go up in time frame and see if I find something that lets me know like, oh, wait a minute, the consolidation is actually, say, like an inside and down or something like that. Okay. So, for example, this is 30-minute candles. We were going sideways for a long period of time. We actually created on the 30-minute an inside and down. Now, you'll be wrapped up in smaller time frames. You may be like thinking about different things and you didn't realize that, hey, really the bigger picture was you needed to stay short as long as the inside and down kept its integrity, right? So as soon as it breaks down, boom, 30-minute all the way down into my 4-hour classic style zone that we've tested several times. Then boom, we get the push to the upside. Right here, same thing, inside and down, topping wicks, we come back down to the demand zone, okay? Now, again, I need you to be the experts of flipping through your time frames. Okay. So the 30-minute, who knows? It could have been the 20-minute, could have been a 25-minute. It doesn't matter to me. But what you need to understand is how to identify what's going on. So once again, if things are starting to slow down, starting to get sloppy, we always increase the time frame. Doesn't matter if you use a 10, a 15, a 30, to each their own. I just want you to cut the noise out and start seeing what I see when things slow down. Okay. When things get too fast and you're panicking, don't forget your zones don't move. That's what's awesome about supply and demand. See, a lot of people have indicators, but they don't know what to do when things change in the market. One thing that I will die on this hill is that supply and demand is better than any indicator out there. I don't care what you say to me. You will not win the argument. My levels do not change. I know what they're supposed to do, and they sit there, and your job is to wait for them to get to that level, and then you execute. Okay? That's the awesome part. You're not sitting here going, and I know what it feels like because, for example, you can have arrows on your chart that pop up, and you're like, hell yeah, take the trade to the upside, and then it disappears, and you get stopped out, and you're like, wait, what just happened? You didn't wait for the candle to close. So most indicators are lagging indicators, and you got to wait for the time frame to close before you actually get the signal. This is a little bit different, right? This zone is concrete. You guys understand. Let's go ahead and restore those cells. And this is what this looks like right here. So once again, this is a power move for me. I use the same thing every single morning, and I almost make money every single morning trading the futures. It's pretty impressive. It's not a, hey, look at me, I got a big ego. I think it's more passion. That's what you need to hear in my voice. It's passion because I want you to stop overthinking and I want you to start making money. It's that simple, guys. I care more about your success in this room than I do on my PL. I promise you that. Okay. I still get paychecks. I still get retirement pay. All that stuff happens for me. But it's more important when I'm here in Simpler and I am teaching and I'm showing you proof of concept that you guys are getting it. So it's really, really important that you feel that you can talk in here and ask questions to me. So it's like, hey, John, I get what you're saying, but I just can't do it, man. And then we can break it down and figure out why can't you do it? Are you afraid? Are you scared? Are you trading with scared money that you shouldn't be trading with? Maybe you've had a lot of losses from your previous place that you came from. There's a lot of reasons why people have a hard time. But at the end of the day, the zone is the zone and the process is the process. Okay. Now, Melissa said that I will talk about the PMZ. The cool thing about the PMZ, folks, is that on the PMZ, it really is no different than a supply and demand zone. It's not. Everything that Trendy teaches is basically a zone. Okay. And these zones, they all look the same if you think about it. The pre market zone just comes from the pre market. That's all. All right. And it uses a certain time within a certain period. It's not the whole pre market. I mean, come on, guys. Do you really think that I would just do something simple like that? Years ago, people would go, "Oh, so you just use the pre-market?" No, come on, man. All right. So it's a little bit different than just using the whole pre-market section. I use a certain time, and I created a zone, and I just found that when you back test it, right, the ability of making money out of here is very, very quick. Okay. So when am I releasing it? As soon as like Simpler and I get together and we decide, what webinar we're gonna, uh, you know, uh, push the webinar or the indicator out on, and Melissa and I will most likely be doing that webinar together, and then that's when it will be available. I mean, I think it's been on the charts long enough. I understand it. It's been built for a while. I've been using it for months now, and it works really well. So, all right. So this zone on the PMZ, again, Mel, I want to make sure Mel told you guys today, she repeats this. She does not trade the first 5-minute candle. Okay. So let's start with that. That is a conservative approach. What that means is Mel is waiting for 5 minutes. And sometimes, guys, that 5 minutes can feel like 30 minutes, especially if it's moving, right? Like, let's say it does that. You're like, oh man, this is 7,600. This is 7,620. 20 points just moved. Doesn't matter. Wait for it to close. Then you're going to wait for a return. She mentioned if it's with the trend, if the overall trend is green, she is looking for execution right around this time. And I say right around this time, I don't need this to touch. If it's close within a half a point, whatever, you're getting close, you should be thinking about buying. Okay. And what you're looking for is when price comes back to here, you're going to take that trade. Now, I'm going to tell you this is considered aggressive. Okay. Let's say that these are 5-minute candles. This is 5 minutes, 10 minutes, 15 minutes, 20 minutes. Let's say that this 5-minute candle just started. It still has 4 minutes to close. Okay. Now, you guys know in 4 minutes, this thing could go all the way down here if it wanted to. Okay. There's a lot of things it can do. So if you decide to take the trade right here, right before it touches, I consider this aggressive. So yes, you were conservative here, but you're aggressive here. And that's because a lot of things can change right there. Okay. Everybody understand that. I said again yesterday, and I'm making sure you guys understand. Conservative would be, hey, this thing open. It's only been open for 1 minute. We're going to wait for it to close. And there's a couple things that can happen. I want to demonstrate what that means. Let's say that you waited 4 minutes and it comes all the way down to here. Well, Now what you have is what we call a neutral setup. And from here, the neutral setup can either go here or it could go down here. Now, as soon as it goes neutral, I go to a 1-minute candle. 1, 2, 3 in this demonstration. It closes above, I'm long. 1, 2, 3 closes below, I'm going short. All right. We waited. You decide to take the aggressive. What you're looking for on an aggressive is that price is going to move back up. But sometimes it does not, and we can still be aggressive. Okay. Price goes down a little bit more, and you're like, uh-oh, maybe I did the wrong thing. You can decide as we get lower on the curve of the PMZ, it's going to be somewhere in here, right? I'm going to look to add again. Boom, I add right there. Price goes in my favor. Now I have 2 contracts. I'm most likely trimming here, and I'm holding the other one to see if we can continue to move up there. Okay. Now we reverse the process on the backside. It looks the same. The PMZ is here. We wait for prices to close. Then we're going to wait for prices to return. Here, you can decide right at this point if you want to be aggressive. If you are aggressive, you're looking for prices to break down immediately from here. But sometimes they do go against you a little bit. That's okay. It's not until this point here that we know that, hey, most likely we're doing something wrong. Now, yesterday, the PMZ was so wide. This is your normal PMZ. This is your PMZ on CPI yesterday, right there. Okay. And it was super wide. And Mel had brought up that over a period of time, she has been looking at this. And what she's noticed is that when the PMZ is super wide, that she can trade both sides of it the opposite direction. Now, what does that mean? Yesterday, I know what she means because I developed this and I've been around for a long time teaching it. So what she's saying is, and we actually, it's kind of funny, Mel, we actually had a member, Dave, who used to do the same thing all the time, even if it was skinny, and it would throw people off because I would be in here teaching a certain way. And then he would be like, I'm going short right here. And it would be confusing for some people, but it's true. If you think about this, guys, when we are below here and prices moving up in this wide PMZ, so just the red part, when we get up here, this is going to be resistance until proven otherwise. And when prices move down here, this is going to be support until proven otherwise. And that's exactly what was happening yesterday. Okay. So our PMZ was super wide and it literally, I think it was like 10:30 all the way to the end of the day was a fade at both sides of the PMZ. Price could not even move over this level more than 5 points. So my confirmation would set up, I would go long and I would get stuffed. Down here, price would confirm right underneath. I would go short and boom, it went against me. Boom, 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 boom. It was like this all day long. Okay. So what Mel had brought up is, hey guys, when it's super wide, basically look at doing the opposite. Trade within the boundaries of the PMZ. It's no different than when we tell you, when I teach you about channels, look to short as we get up here, look to go long up here or down here. Sorry. Okay. So just something to think about. And I want to make sure I brought that up this morning. Okay. All right. So today, another thing that I want to make sure everybody understands, this is on the MES. Let's go over to the ES. I'm going to walk you through this. This is my blueprint. Okay. It's been working really well. Prices came down. Also, guys, today, not only did it come into the purple zone liquidity chop, we got a buy signal, but it also was coming into the 4-hour cloud. We had a lot of reasons to be long there before the catalyst even came out. Okay. Now, the one thing technical traders, I'd say we're technical as well, but When I say technical traders, I mean everyone outside of supply and demand are typically looking at the, the very, I guess, what I would call like simple things. So you have a high over here, you have a lower high here, and what they're looking for, what really gives them the confidence is making a new high over previous highs. So this is a really big deal right here. And this is the candle that Mel was talking about that came up and tested this inside and down right here. So if you were to take this red zone, pull it to about right there, this is where we tested already. Okay, right there. All right, this is where we tested already. So you can have your zone like this. You can have your zone like this. Watch this. Okay, this is a trick that we teach in the class. We're going to use the quadrant lines. We're going to go from here, from the top, so the all-time high, to the beginning right there. Okay. Now, I like to keep the entire zone on here so that I could take into consideration these quadrants. They just work really well. They do. And like today, as long as the bottom of my 7610 holds, it's like a line in the sand. As long as it holds, I'm looking for 7620, 7630, 7640, 10-point increments, all the way up to 7650. Okay? So the if this, then that. If price continues to hold 7610, I'm not looking to go short. Okay? If you want to get short, that's where we come over here. Many of you are using a 3-minute. Again, doesn't matter to me. But for me, I'm using a 1-minute if I want to get aggressive, a 3-minute if I don't want to be super aggressive. Okay. And I'm not going to short because the overall trend is extremely bullish unless we get a confirmation. And then on top of the confirmation, it has to be a good risk to reward. Okay. It has to be a good risk to reward. All right. Cool. So we understand that. We're all on the same page. Now, just for a few minutes, let's talk about what the market is doing. Okay. And for anybody that doesn't know, yesterday I put the other Mastering the Trade room here, MTT room, right here. And I like to bring this up because we work here at Simpler. All right. And I want to make sure everybody knows it's not just my room here. It's not just, we have a lot of traders here. All right. We have a team of traders. All right. And this is the MTT room. And this is where you find, this is kind of like, what is the right word? This is where you got a lot of different traders kind of trading the squeeze, if you will. These are like the fundamentals, like or the foundation, I would say, of Simpler, right? I'm a supply and demand trader. And when JC and I met, he was interested. He was like, we don't have a supply and demand trader. That's really cool, and we got to know each other. And then I was brought here. Okay. So that was really, really cool. And that's what happened. Okay. So just know that there are other rooms there if you guys are interested, but if not, that's okay too. All right. Now, what I want to do is I want to take a look at what's happening in the market, and we do that by looking at the watch list. And the watch list tells me a lot of different things like, hey, man, Bitcoin's been doing pretty good lately. We're back, baby. We're above 65,000. Holy moly. Again, I'm not super excited till we get over like 80 something. So cool. Oil, I'm thinking, I don't know if I've lost a trade on oil this year. I would have to go and look. But I've made a lot of money on CL and MCL, just shorting it. And I've went long a couple times. And I'm not going to lie, when I see it at $80, I feel like shorting it. But I haven't looked at the chart since I went to Alaska. So I might have to look over here and see if there's a short setup. Okay. ES futures up 19 points. Okay. Not a big deal. Dow Jones only up 80. NASDAQ up 175. Not bad. Okay. Let's look and see if people are actually trading with the market. So 314 to 317, we're up 3 $3, so 1% there on Apple. Moving on down, we have a AVGO. We're up a little bit here. We took that trade yesterday. Moving on down, I want to see if there's any big movers here that are trading outside of what the market's looking like. You know, a lot of things look in line, if you ask me. Google is flat. Moving on down, everything looks pretty sideways to up just a tad. J&J, I don't know if they reported, but it looks like they did. If they reported this morning, guys, they went down. So you, as a supply and demand trader, what I would like for you guys to do is I would like for you to see if you're at a demand zone. Okay. If you're at a demand zone, cool. Then you would be looking to buy off of the catalyst that push price down into there. All right. As we move on here and we keep moving down, Netflix is up just a tad. You know, Netflix likes to push up when the market's kind of starting to get in trouble or is in trouble because they figure everyone's just going to go home and eat popcorn, drink beer, and watch Netflix. Okay. NVIDIA is down just a tad, but they've been super strong. Let's look at NVIDIA. This has been my baby that I have been trading left, right, and center with you guys. We've been selling stuff, selling credit, going long, all kinds of fun stuff. And we want to know what's going on here. So just like the market, it's pulling back just a tad right before the open, but you have this 4-hour cloud here. If I were you, I would be looking at the PMZ this morning if you want to intraday trade. And I would, you know, mark a couple things here like, hey, right around the 9 EMA, we'll probably find a little bit of support. And then I would take this to a 5-minute chart and I would wait for the PMZ to open. Okay. And for example, my bias is to the upside. All right. Let's say the PMZ is here, it breaks down. Then most likely what I'd be doing is looking to possibly go long here. And then if I get the move that I want, I would just scale in. And if I get the move that I want and we break above the PMZ and hold, then I can add into here. And then I'm looking to see if we can come into that high over here at 213. Okay. Really simple process. And if it closes below here, I get stopped out. And then maybe I try again down here at the trendy edge. Okay. Awesome. So, anyways, far as what I'm looking at today, not a whole lot. It is Ashley and I's anniversary, actually today, and I will be here until I believe Mel and I have a Q&A. Once that Q&A is over, I'm going to take off, and her and I have some dinner plans. We'll probably go. Well, we're not going to the beach, guys. The Blue Angels are flying. So that means our traffic is really, really bad. Um, this is where you have to have a boat around here. And even to take a boat on the water is a nightmare. Because, I mean, thousands of boats, guys. I can't wait to show you guys pictures. It's absolutely nuts. Um, yeah, it's pretty wild out there. But it's our anniversary. We got some reservations for tonight. And once again, guys, just really happy to be here and teach with you. As a reminder, Mel is leaving on vacation, and that means you are going, well, what I'm going to do is be here every morning at 7 o'clock Central for those 2 weeks that she's gone. So please be here, be ready to rock and roll. I will do the same thing every single day. I will trade futures and SPX in the morning. And then after that, I plan on doing what I'm going to do while Mel is gone to make this really easy because my time is valuable. Is that as soon as I'm finished making money on SPX and in the futures, I'm then going straight into Q&A, and we're going to spend 30 minutes. I sent out a note. We're going to spend 30 minutes to an hour right after we're finished. Okay. And you're going to ask me questions, whether they're charts, if you want to trade something live, whatever. We're going to do that. And then time is valuable. The trendy process should not be sitting in front of the screens all day. Trendy is being trendy. It's coming in, making money, look at your swing trades, maybe take some swing trades, and then live your life, you know, between the stop and the target. All right. So all those things are really, really important to me. I can't wait to be with you guys. In the trendy room, I'll go ahead and share the futures chart just because I trade off of it. But Mel and I are both going to be leading you guys this morning on the open, okay? So thank you so much for your attention. I appreciate you. And once again, happy Wednesday.